Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Hit that like button. Subscribe if you already haven't. Just want to say I've taken a little break from the videos, mainly because a lot's going on in my personal life. I didn't have the energy and the time to do one or think of some. So I looked at the market today and had to do a video. First thing, the economic data, GDP, big miss, supposed to be 2.5% growth, 1.6%. PCE higher than expected. Inflation, that is a stagflation reading completely. Worse economy, but higher inflation. And that's where the Fed's really going to be trapped. And because normally, if there is high inflation, their tools, they're going to raise rates. But if it's a bad economy, they just lower rates. But if it's inflation and bad economy, they either have to kill inflation or stoke inflation really high and cause so it's depression or incredibly high inflation. And I mean, I'm not saying that's going to be the complete environment. I think they're going to go higher for longer for a little bit. They might cut once or twice, but it won't be material. But we'll see. I haven't had my mind made up on anything. But if you look at just going back to the fundamentals, look at gold today. Gone up. It started going up around 10:30. Gave market some time to digest it. And the miners have gone up a lot. And a lot of people, they've been calling for a short-term top, a correction. A lot of people, they're trying to get fancy and get a name, trying to look like the greatest trader or whatnot. And I'll just say this. If you look at the minings, and I was looking at my mining stocks today, this correction has barely made a dent, if anything, in my portfolio. And this is why I say it's just to buy on dips, hold, because we're in a different mindset. I'm just going to go back to as an example. Some corrections in this gold silver bull market have been either deep or severe. And just going back, we'll just go back to when the bear market ended in 2015. There was a short-term, basically a short covering rally, a bottom and a base. That went from around 2016 to 2019. That was a 3-year base. And then what happened? From 2019 to 2021, went up significantly. And then there was another correction, which I thought was going to be a year, lasted a lot longer, 3 years. So this correction that we're going through that might already be finished, up until 25, 26, or 2700, it's not even worth making a call because they're going to be short, they're going to be swift. And the thing is, you never know when they're going to be over. Short and swift corrections, when they end, it just goes up. And if you tried to time or hedge, in my opinion, you could end up missing the upswing. That's why I really, I thought there was maybe a correction or not, but I didn't really want to call anything because I just think it's dumb. Now, you never know. It could end up going higher or longer, but in my opinion, right now for the next year, it's a bull market, and corrections are going to be short. They're going to be swift, and I do think there will be problems with the economy. I think there'll be a sort of a rug pull, maybe in 2025 or after an election year. And speaking of an election year, this is the stock market. It's another reason, despite it not doing well the last couple of days, I didn't really say much because gotta go in the fundamentals. It's an election year. They're gonna do everything they can to keep this market up. So anyway, those are my thoughts. If you look at it, nothing's really changed. So that's all I have to say. If you like this video, hit that like button, subscribe if you haven't, and I'll see you next video.